welcome to my mini lecture on the working capital cycle. So, so today we're going to talk about the working capital. We've been talking about sources of finance and about the average rate of return and payback period, but now we're going to really move on into how money runs around in businesses. So, what is working capital? The base definition is basically the day-to-day finance for running a business, and it is used to measure a firm's ability to meet current obligations. So what does that mean? That means paying for the rent, paying for electricity, water, gas, for food, and so these kinds of things all need some sort of method to pay for everything, right? So the equation for working capital is pretty easy. It's basically just the current assets minus the current liabilities. And I want to talk briefly about what I mean by current assets and current liabilities because this is important. When we talk about working capital, working capital is not just how much money you make minus all your liabilities. It's current assets. So, what are the types of assets that a business can have? For number, they can have stock, which is basic goods of raw materials, semi-processed goods, and also finished goods. There are also the second type are debtors. So these are people or organizations that owe money to the business. So it could be that they borrowed money from the business, or they could have bought something and haven't paid it back yet. So these this type of current asset, is kind of long term. It's not gonna come immediately. So businesses do have to consider that as well. And the third is pretty basic. It's just cash. So any cash that the business has in its bank, so it can easily use it for working capital. And now we move on to current liabilities. So the first type is an overdraft. So an overdraft is basically a facility that allows businesses to raise short-term finance, i.e., negative balance on accounts up to an agreed limit. So it's basically like a short-term bank loan. Second type of current liability is our creditors. So creditors are basically people, organizations that the business owes money to, and dividends, which the next type of current liabilities are the shares of profits due to shareholders. When you buy shares of a business, you get your dividend. So and so that's why it's one of the current liabilities because the businesses have to pay those shareholders. And then next is tax. So that's any tax that to the government, and it can be a whole variety of different types of taxes. So that is that is the last type of current liabilities. And so now that we have a current understanding of current assets and current liabilities, let's look at the diagram right now. So in the middle, it's just cash, and we all pretty much know why cash is important. But this diagram is really really interesting because this really can get us a sense of what the working capital is. So you can see that the arrows going out of cash means the cash that is being lost, and then arrows going into this box is basically is money that's adding more money, right? So you can see cash drains. So cash drains basically cash injections. Cash drains basically anything that is so-called loss, and we already talked about dividends and taxation. There are also purchase of assets. So if if a business needs more machinery, for example, they would have to spend money on that. And so other time losses of money, and here we have cash injections. So anything that really goes into this pool of cash here, we have loans, profit, sale of assets. So sale of assets, purchase of assets. Uh, this is, if you recall the finance depreciation, some businesses do have to purchase new assets in order to replace the old ones, and sometimes the business may have to sell extra assets for more money. So now that we have an understanding of what cash injections and cash drains, here we have really a cycle here. So from this pool of cash, uh, we have next purchase of materials and as well as creditors. So let's just say you're running a business, right? And I don't know, maybe you're running for a business for uh, lemonade, right? So you can't just make lemonade right away. You obviously have to buy raw materials to provide that lemonade. So you would need to get fresh lemons, right? That would be a raw material. Your fresh lemons from farmers. You also need water. You also need sugar. So all of these things are part of this working capital. When the business makes its lemonade, it's part of making all of these products to offer for customers. And oftentimes, just depending on how big the business is, but if you are a titan of industry in the lemonade industry, you would have to buy lots and lots and lots of lemons and water and sugar and all that stuff. So the creditors, you really have to manage your money to make sure that you pay those suppliers for your lemons and sugar and water. So next, we go to costs incurred from production, so wages, so paying for those people to run your run your machines to make that lemonade. You can't just have the machines working by themselves. At least not yet. But you have to pay those people to to run those machines. You have to pay people to make sure that everything is all right with the production. Also with the machines, you have to for maintenance, for oil, all those have to are part of these current these liabilities, these things that take money away from the cash needed for working capital. And then next is finished goods and services. So you have to. So after all this production, you have the finished goods and services. You have to make sure everything's all packaged and uh, make sure everything is all set. And so these three things are for production in general for businesses. I'm just using lemonade as an example. And then now we have money going into this pool of cash. So this is the opposite. So what types of things are going into this pool of cash? So we have goods dispatched, costs incurred, debtors arise from sales. So basically just selling the products, and obviously if you sell a product, you get money out of it. So oftentimes when you sell a product such as lemonade, or maybe some of that money will go back into the cash right for the entire business. But you may want to dedicate some of that money for per sale of bottle of lemonade to the working capital. Um, remember that profit is not just storing money into the bank. It's using that money wisely. That's very important to a business. So now that you sold your lemonade and all your products, or maybe you sell other juices or something like that, and you have debtors arise from sales, so you still have that time time period between when the debtors agrees to buy products and the time that they actually pay you. So the time wise, you have to manage your time correctly in order to make sure that you get your money on the right time and for the right purpose. So those two are I wouldn't say they're the same. However, you really have to remember that you have to know the relationship between goods dispatched, costs incurred, as well as debtors arising from your sales of the product. And of course, after they purchase sales, then debtors, and remember, debtors can be any from customers to other businesses. So payment received from debtors. So basically, the sales revenue from customers and other interested people who want to get your product. So so I think we got a pretty good understanding of the working capital. And I just want to repeat again, working capital is for everyday business. Just constantly having things going on every day. So whether let's just get another example. Maybe it's for a consulting firm. It's not just you hire people to become consultants, right? So it'd be rent. Maybe you're renting space in a skyscraper. You maybe pay for coffee. So you can't just say, okay, work for us. You have no benefits. So a lot of people have different expectations for certain benefits, and maybe coffee, and also cleaning, as well as computer maintenance or office supplies, and lunch or beverages, lounges, all kinds of stuff. So all of these have to be considered, and that is why our understanding of working capital is very important when it comes to IB business management. It's very important for entrepreneurs, business students to to help make decisions based on based on business cases and problems and other dilemmas. So that's going to be the end of our working capital cycle lecture. I hope you enjoyed the mini lecture. Please feel free to ask any questions any questions from myself or Mr. Opper. And thank you very much. That will be the end. That will be the end. So hopefully this helps, and